Alrighty guys, in today's video we are going to be talking about, is Robinhood stock a buy? So I hope you guys enjoy it. If you guys get anything in value out of this video, hit that like button, subscribe to the channel. If you have any questions, concerns, ask them down in the comments. So guys, let's jump into it, roll that intro. I hope you guys enjoy it. Come on. Bam! Now, for those of you that don't know what Robinhood is an online broker that allows you to buy and sell stocks, ETFs, and even cryptocurrency. They also have a debit and money management platform, and it's just an overall very beginner style broker for people that want to learn to invest. It definitely draws a younger crowd with how easy it is to start buying and selling stock. Now, by the time you download the app and fill out all the paperwork, you can start buying your first stock probably within the first 15 minutes of downloading the app. Now, just because they have a good platform, does that mean you should invest in the stock? Absolutely not. Now, there's a couple of things you need to look at when you evaluate a stock. There's what you call fundamental analysis and technical analysis. So fundamental analysis is pretty much looking at all the numbers, looking at the revenue, the margin, and seeing if it's a good buy. There's another thing called technical analysis. This is when you use charting, looking at support, resistance, and moving average lines to determine if the stock's a good buy. So we'll talk about both of those, starting with fundamental analysis. Now, Robinhood does have quite a bit of cash. They have about $12.5 billion, which seems like a lot of money. I get it, but they also have about $10 billion in long-term debt, which is never good. You never want to see a company start taking on long-term debt. But hey, if they have good revenue, all of that will be wiped out. What's their revenue looking like, Carter? Well, their revenue is down 42%, which is terrible. Over the past couple of quarters, we've seen definitely a ton of volatility from Robinhood. Some quarters they're up, some quarters they're down, making the stock very risky. Now, hey, if they're volatile, does that mean they are profitable? Absolutely not. Robinhood right now is not profitable. They have actually a negative profit margin of 203%. Meaning, for every $100 Robinhood brings in for revenue, they actually lose about $203. Terrible. You never want to see that when you invest. So now that we have a good understanding of some of the fundamentals, now let's turn to the technicals. Alrighty, so we are looking at Robinhood, ticker symbol HOOD, also known as Hood. Looking at this stock, you guys can see it's terrible. Look at this downward trend. The stock was hitting highs here at $85, sold off down to about $40, fell all the way down here to $10. Now it hit lows at $6.81. So for me, anytime you evaluate a stock, there's a couple of things you need. The first one is you want an upward trend. You never want to invest in a sinking ship. And right now, that's kind of what we have. We have just this downward trend in the stock price, and everything is just not looking great. Looking at their past earnings, not doing well. Looking at their past earnings, not doing well. Their past earnings, not doing well. Past earnings, up on revenue a little bit, not a big deal, but overall just a ton of sell-off from this stock. They have a hard time bringing in revenue lately. I definitely think right now for me there's better opportunity elsewhere when it comes to investing in stocks. Now, if I was going to go in, right, if I was going to pick a price to say, okay, this is where I'm going to invest, maybe 0.5% of my portfolio, I would try to obviously get it down here at some lows, just because that's the proven price of somewhat support, at $6. But overall, it's just a sinking ship, guys, and I think there's better opportunity elsewhere when it comes to investing. Just invest in the general market. Apple, Tesla, all those big players will perform better than this. Now, Robinhood does have a good platform, but the stock itself is way too risky and volatile for me. The revenues aren't looking good. They're increasing long-term debt. And overall, just way too much volatility. This is a company that definitely has some potential, but just given the circumstances of the fundamentals and technicals, right now there's better opportunity elsewhere with investing your money. So guys, that is it. I hope you guys enjoyed it. If you did, hit that like button, subscribe to the channel. If you have any questions, ask them down in the comments, and we will see you guys later. Remember to stay happy, guys, stay positive, and stay safe out there. Take care.